Hey everybody, I'm Cantonese Cat. Yesterday around 5 p.m., I was in a pretty funky mood. Not so great. So much that I'm gonna skip my jingle today. I think a lot of folks are also suffering, so I'm just gonna get right into it. If you have felt a great sense of loss from the market to life in general because of things that you cannot control, hear me out. Now, even though I'm a cat on X and on YouTube, I can share with you my thoughts that may or may not apply to you. But before I say anything, please seek help if you have thoughts of suicidal ideation. If you don't think that you're important enough to have others to care, think again. Every minute that you live, every hour that you exist, you live with an opportunity to change your life for the better, and also an opportunity to change the lives of others around you for the better. If you don't think you matter, if you want to end it all, you're forfeiting this opportunity and there's no coming back from that. I want you to have the courage to face the challenges and rise above it, which won't be easy and won't be immediate, but things do get better if you take it as an opportunity to change your life rather than ending it. Please seek help if you need. With that said, I want to talk about money. That we often view ourselves and our worth based on money, but this is something that can change throughout different stages of our lives. Sometimes money becomes so scarce that we have taken a lot of different desperate measures to make money. During desperate times, or what appears to be desperate times, sometimes people make desperate measures and desperate mistakes. Market makers know this. Market makers are basically banks, the big money that control the financial system, that give you different financial instruments called leverage, where you can get a sense of control and place a bet based on whether or not you think a stock or an asset like cryptocurrency is going to go up or down. They offer these lofty 100x returns if you're right, and they take everything away from you that you put on the table if you're wrong. They try to get you to play a dangerous game that you have very low odds of winning without telling you that you have very low odds of winning. They don't care how poor or how desperate you are. The more desperate you are, the better. They don't care if you need to pay your mortgage or to pay your hospital bill. They want your money. They don't care. This is all a squid game. Volatility is the road to wealth. And this is the S&P 500 in log scale. If you can handle these 20, 30%, 50% drops that look like a bleep on the radar, and if you're able to hold on to your assets, to hold on to your stocks over for decades, you'll make money. The S&P 500 used to go up maybe around 6% during its early days, around the 50s, and then later on it goes up probably about 8% annually, around the 80s to 90s. And currently, right now, because this is a log scale, it actually goes up exponentially. Right now, the S&P 500 goes up probably about 10%ish, somewhere around there annually for the last decade or two. The odds are forever in your favor if you can hold on and if you do this long enough. Despite people saying that the market is a casino, if you simply hold on to common shares, you will win over time. The same thing actually happens with cryptocurrencies because the overall market cap for crypto continues to rise up and to the right over time. And people who are able to hold on to their tokens, if they have high value, large caps, and are less speculative in general, they win over time too. You just have to give it enough time. When it comes to money, the reason why these assets continue to improve in their wealth over time is because money also grows exponentially over time. This is a total US money supply. It went from billions to trillions over the last few decades. They've been printing a lot of money over the years, over the decades, and will continue to keep printing money for the foreseeable future. The world governments have no choice but to keep printing money because there's a lot of deflationary forces from both innovations, driving goods and services cheaper, as well as from the world population not growing as much as they were from before, with a lot less demand for these goods and services over time. This is a glitch that if you understand, you'll never stop investing and you never stop owning assets. However, there are a lot of distractions through this journey that will always be thrown at you. Anytime when there's a confusion about something, when there is hype and where there's no clear regulations, there's always an opportunity to throw you off guard and get you distracted from doing what you should be doing to accumulate wealth. In the stock market, if you don't have money to buy stocks because you have to pay your bills, you probably shouldn't be buying that stock that you cannot afford to buy. But these so-called market makers, which are basically bankers who are always thinking about new ways to make money from people who don't have money to lose, came up with this idea. Why don't you buy stocks with money that you don't have? Well, what do you have? Put down your rent money, put down your lunch money. We'll let you borrow money to buy stocks because they're all going to the moon, right? If the market goes up, your positions will go up, and that's on us. Let's call it margin. How often does the market crash 20% happen anyway? How often does your individual stock prices crash 50% or 80% anyway? It doesn't happen very often, right? Because there's very little volatility in the market, am I right? Of course I'm being sarcastic. Market corrections of greater than 20% happens all the time. We just had one in April. Valuable stocks, even Apple, Google, Nvidia, Amazon, in their price history, have dropped 80 to 90% of their value at some point during their trading history. Guess what? These market makers know exactly what stock prices and how much these stock prices will have to drop so they can take these shares away from you like candy. This is why flash crashes occur. This is how they make money from the desperate, and that's how they trick poor people to continue to remain poor. Another thing is called stop loss. Market makers also want stocks to be transferred from the weak hands to the helpless, or from the helpless in the weak hands to the strong hands. The strong hands, they don't really need the money. They can afford to lose money so they can make money. Market makers came up with this idea for the poor people and the helpless. It's a financial tool called a stop loss order. And spread the word that, hey, most important thing you can do is to protect your capital, which is true in a way. If you're going to lose a lot of money, there will be a price where you can set that you will sell your stock automatically or asset automatically for cheap so others can buy on the other side. That's what this is. Quite often, flash crashes happen to trigger stop losses orders to hit. And these things happen from time to time. There doesn't have to be a justification for it. Only for prices to go up again with you not going along with the ride because you lost your shares. They may even trigger these orders below your set price and have you sell your stuff at a cheaper price, a lot cheaper than you initially thought you would sell at during times of panic. Market makers see exactly where these stop loss orders are at. They aggregate them and they see where the opportunity is for these potential flash crashes to happen, to trigger these stop loss orders so you lose your shares from your weak hands into strong hands that would accumulate them for cheap. One other financial instrument that they use to try to trick people is called stock option. Now, many feel differently about this than I do. I don't like options. I don't use options. I don't like to time my investments and trades. Buying options is basically buying a contract and you're betting on the price of your stock to either go up or to go down within a specific time frame. This is often used as a way to start a leverage position on an asset if you think they'll do great or do poorly within a set time. Some also use it as a way to make income, betting on a stock that's not going to move much over time in the short term by trading these kind of option contracts, and you can actually make income from them. However, the masses often play with options when a stock has got a lot of hype to the upside or to the downside. And quite often they time this wrong because they get extremely emotional and ride the momentum to the upside and the downside. And usually towards the least maximum opportunities. Or they get it wrong expecting a stock not to move, and the next thing you know, it just moves on them beyond their belief, and next thing you know, they lose their shares based on these contracts. Buying and trading volatile assets such as stocks is already hard. Playing options is playing 3D chess. This is a financial instrument that has worked well for some, but the majority of people lose money from options. It is because The probability is stacked against you. Market makers see exactly what options are being bought and sold, and they know the price and the timing of these options to expire worthless. This is a concept of Max Payne level, where stock hits certain level at a certain time where the overwhelming majority of option contracts become worthless. This is how a lot of people lose money. You might perform a lot better than other people with option strategies. If you do, good for you. But I based on what my understanding is from seeing how people strategize this, it's not as easy as one would think, and it requires a lot of experience and sometimes luck to play options well. And then you have people playing Squid Game. There are people putting down what they cannot afford to lose, and they're betting big on certain crypto going 10x or 100x up or down. This is really betting against the casino, which often has insights and influence over short-term price action. They literally have all the information about who's betting on what and how much. They literally know what price a crypto asset would have to move to so you'll lose your bet, and that they will get to take what you cannot afford to lose if these prices get hit. When exchanges offer these products, they're extremely confident that your odds of winning is slim, and that they will most likely take what you own like candy. Going back to the idea of the Squid Game, your odds of success is better if you don't play. However, many are driven by desperation. They do not have the patience, and they don't believe that they can win with the very little money that they have. I read comments on Mountain X posts saying, when I'm talking about not using leverage, some people argue against this, saying not everybody has money, and you shouldn't tell people not to use leverage because that's the only way that they can win. Now, I admit that I don't know everything. You can even say that I don't know anything. I do know that if you play the odds are stacked against you, I want to see life as an opportunity to improve and not to have the wrong expectations. I want to see you win, not to see the big money are telling you how you could win when the chances of you losing is a lot bigger than you can imagine. If you are to do this, and if you are one of those people who are extremely good at it, with the combination of luck, like 456 here, then go for it. I root for you. If it doesn't pan out, you're not the only one. Many have resorted to desperate measures to play low-odd bets. That's what bets are. You can see how the flash crash of crypto on Friday have liquidated a lot of people. These are basically the market makers have information to this. These are prices that that Bitcoin would have to drop for people who are doing some sort of leverage long position to lose their position and get liquidated and lose everything. Price did a flash crash over here, and billions of dollars have been liquidated from people who are using these leverage instruments. A lot of people lost everything on Friday. The same thing happened with Ethereum. The market makers know exactly what prices Ethereum would have to go to so that they can take all of these different collaterals from you like candy. This is a post by my friend, the great Matt Speed, telling you what happened yesterday. October 10th, 2025 was a bloodbath like nothing we've ever seen before. Trump's 100% tariff threat on China basically caused a global panic on a Friday afternoon after hours, sending Bitcoin crashing, Ethereum crashing, and the entire market in freefall. Even the stock market after hours was not doing well. Over 19 billion in leverage positions got liquidated. That's 20x of the amount of liquidation happened during the COVID crash, and also the 12x of the amount of the FTX implosion. For those who don't know, FTX was an exchange that basically went down, and a lot of people ended up getting liquidated. 1.5 million traders got wiped out, with longs taking 90% of the hit. There is an exchange called HTX right now alone during this particular crash that saw $87 million of liquidations on Bitcoin. Now, here's the silver lining. If you're able to hold on to this is the great deleveraging that a lot of people are looking for before price can actually go up, because the market makers don't want to pay your leverage positions. There's no reason for them to give you 100x on your bets on the way up. How do they do that? They crash prices potentially to make sure that strong hands are getting what they can from the weak hands, liquidate everybody, and take out your stop losses. The market's been scrubbed clean. There's no more cascading stops, no more forced sell dragging us down. Leverage ratios are resetting to healthy levels. Open interest slashed by 10 billion. Volatility could easily flip from fear to FOMO just like that. And you know how people behave. As long as price keep going up, they're going to come back. Now, as far as I'm concerned, as far as the Great Matsby is concerned, post-liquidation squeezes lead to monster rallies. Remember March 2020? Remember FTX? And now, Bitcoin is not that far from its all-time highs. Fresh capitals could be flooding in. There's actually no sign that liquidity is really drying up based on looking at the markets. Wells are accumulating, and the path for Bitcoin to go up a lot higher is now wide open. Now, if you survived, you don't even have to buy the dip. If you survived this, if you hold on to your assets, congratulations, you're positioned for any potential short squeeze. Now they're starting to pile into shorts because people are bearish on the market now. Do your own research, but this purge, probably best thing could happen if you want a deleveraging event to happen before price goes up. Now, you can say all of this is speculation. You can say that these are just hopium. You can say that this is just my opinion, man. And you might be right. You don't have to listen to anything that I have to say. I'm just here to share my thoughts. My message to you is to hang on. If you can hang on to your assets without being forced to sell or to force to lose it all, great. I sincerely think that there will be better plays on the other side. I sincerely think that there will be a better place on the other side. I cannot promise you how long or how much it will be better. Nobody can promise you that. But the brain has a way to trick you into thinking that things are really bad and cannot get better over time. The brain tricks you. Keep the benefit of the doubt, because time changes, your decision changes, and who you are also change. If it feels like rock bottom, maybe it just gets better from here. Don't do anything stupid that you regret. Don't spiral down. Better yet, don't do anything stupid that you don't get a chance to regret and reflect on later. Because that's no way to think. Prove it to others that you're better than this. But have realistic expectations and don't revenge trade. None of this are financial advice. I think these are live advice. And this is just a cat sharing thoughts and talking out loud. But I sincerely wish all of you the best and nothing but the best moving forward. I hope you all do well moving forward. And that is my sincere message. Have a good weekend, or try to.